Assalamu alaikum friends, welcome to SBR revision series for September 2021. So after covering all the IAS, all the IFRS standards for SBR, now our focus will be on some theory questions, right? Not like calculations. Now it will be on more on discussions, right? So, and this always features in your section B of your SBR, okay, in your exam section B. So this and the next topic that I'm going to cover in the next video are equally important. You will always get in your SBR exam, no doubt about it. So this topic is analysis and interpretation. Under this we have many areas to cover. Okay, so let's start. The topics that we are going to cover under this analysis and interpretation are, that means we are analyzing the performance of the company. For that, we need financial performance, non-financial performance, additional performance. Okay, why we are making the financial reporting and integrated reporting. Okay, so let's start with the exam focus. Why it's important from the point of exam before we start the topic? Because it always comes in a section B, and 2 professional marks will be allocated for this question, where you are having an analysis and interpretation question. And from your exam kit questions, these are the questions that you need to attempt. Guidance in crypto I have completed. It's there under my revision series, SBR revision series. So revision kit. And the next two, inshallah, I will be covering it in for the December exam. Okay. So let's start with the purpose of financial reporting. Why financial reporting is so important? We have covered this under conceptual framework. That was the first revision series that I have covered. Under that, the purpose is there. So this is just the repetition of it. If you have went through my conceptual framework video, you will know this, that this is just a repetition of it. So I can quickly cover this. Okay, the purpose is number one, to give useful information so that users can make decision. And who are those user groups? The main ones. Okay, there are so many other things, so many other stakeholders, but the mains are investor, okay, lender and supplier. So according to the conceptual framework, there are 2 reasons why the users need information. One, to assess your cash flow. Second, to see how the managements are using the resources that they have been given to for looking after. It's called stewardship, right? Are they the good agent of you? Are they looking after the resources, the shareholders' resources, right? So now let's start with the financial performance measure. What are some financial performance measure? Basically, they're talking about ratios. You have to calculate some ratios because ratios will help you to understand financial performance and position better to make investment decisions. Okay, so these are some very common ratios, but of course, this is not it. You might get some more ratios which are not there in this list. So I always recommend you, please go and memorize all the ratios that you know. It's very important. Formulas will not be given in your formula sheet. You should know the ratios. Okay, not only in this exam, any exam you take, you should know the ratio formula. So first type of ratios are profitability ratios. One example is gross profit margin, operating profit margin, gross profit margin, return on capital employed. All these are examples of profitability ratios, which measures how profitable your organization is. Second type is known as liquidity ratio, like your current ratio. Okay, then we have capital structure, gearing ratios, your debt to equity. And fourth type, investor ratio, your price earning ratio, your EPS, earnings per share. This is a very commonly ratio under investor ratio, right? Investors look for this ratio. They want to know what is their earnings per share, EPS. And this EPS we have covered under IAS 33. So if you have not seen that video, please go and check IAS 33. It's a very short video, right? There we have covered basic and diluted EPS, how to calculate and all. So here I'm not going to repeat the earnings per share part. That part I've deleted here. I'm not going to cover it here again. It's just a repetition. Okay. And this ratio is also I'm not going to cover in depth. This is just the ratio and you should know the formulas. Okay. Next, we are moving on to additional performance measure. These are some additional performance measure. Okay. Other than financial ratios and all. So, but these are very important. Okay. This is very important. Why? Because this is not defined within IFRS standards. IFRS standards does not define. For example, if you previously check out this ratio, gross profit margin, okay, both gross profit and both sales, you need two figures, gross profit and sales. Both of these are under IFRS standard. They are regulated by IFRS standard. Okay, even your earnings per share, even your gearing, debt and equity. So all this are under IFRS standard. But this additional performance measure, whatever we are going to cover under this one, they are not defined by IFRS standard. Even you are measuring it for the performance, to check your performance, you're using it as a measure, but they are not defined within IFRS standard. So because of that, there are some problems where you are using APMs, okay, which we are going to cover a little bit later. These are some common additional performance measures that are disclosed by entities. There are two types. One is EBITDA, earnings before interest, tax, depreciation, and amortization. And the other one is free cash flow. Deduct your capital expenditure from your operating activity. What is left is free cash flow. Okay, so these are two very common. Okay, and make sure that you know this, because I have seen in the exam in the past paper the questions has been asked on this. One whole question was on APM. I think it was worth some 16 to 20 marks. I don't remember exactly which paper is it, but it was the markings were around some 16 to 20 marks. So you can imagine that this area is also very equally important for you to pass your SBR. Now there are some benefits and there are some drawbacks of disclosing this APM. Okay, two benefits and two drawbacks. First, let us go through the two benefit. Number one, it helps the users to evaluate the entity through the eyes of the management. Okay. Second, it stripes out transactions that are not relevant for the current as well as for the future year operating performance. It's not relevant for current as well as future year. It just takes it away. Okay. Now, what are the two drawbacks? Number one, someone can present this additional performance measure in a very positive way, overly or optimistic, right? Second, since this figure, okay, they are not calculated in accordance with IFRS standard. So giving them so much of importance is not worth it, because these figures are not prepared in IFRS standard. So that means one organization might be preparing EBITDA in a different way, other organization might be preparing in another way. So it's hard to compare also the two organizations, hard to verify also which method is correct. Are the figures correct or not? So these are some drawbacks. Okay. Next, we are moving on to non-financial information. So just now we have finished the financial information, additional performance measure. Now we are moving towards non-financial information. Okay. What are some criticisms of financial reporting? Before we go to non-financial, remember, there were some drawbacks in that financial reporting. That's why they went to non-financial information. Users now want non-financial information other than financial reporting, financial information. Okay. That does not mean that you don't have to prepare financial report anymore. That does not mean users do not demand for the financial information. They do. But because there are some limitations in that financial reporting, they also now want non-financial information. So first, let us go through some criticisms of financial reporting. Number one, financial performance measures only this area. Number one is what? Limited information about future performance. Because those future performance you are basing on what? Some figure that is given to you. Your profit, your cash flow figure, your asset, your liability value. So it's limited. Information is very limited. Second, they do not give any information about your long-term success, such as customer satisfaction. Maybe your company is successful based on your customer satisfaction. That financial reporting will not tell you, right? Third, remember, financial information figure can be manipulated by using accounting estimates or policy choices, which might not be relevant or reliable. Okay, so that's why we have non-financial information. Non-financial reporting measure these things. They measure the performance, but they are not expressed in monetary units. That's why they are called non-financial. So examples are like employee turnover. Okay, if employee turnover is high, what does it mean? Employees are not happy. It's not a good measure if employee turnover is high. That means a lot of employees are leaving your organization. Okay. Second, Customer satisfaction. So customer satisfaction rating will tell you how successful or not, unsuccessful you are. Then delivery times. Are you being late? Are you paying on time? Are you delivering on time? So these are some examples of non-financial measure. Okay. Now we are moving on to the last, integrated reporting. Okay. So integrated reporting, under integrated reporting, we have to know the content of it and the six capital. Okay. So the main purpose of integrated reporting is to tell the user how the entity creates value in the short, medium, and long term by using this six capitals. Okay, value is derived from the six capitals. What are the six capitals? Financial capital, manufactured, intellectual, human, relationship, and natural. Okay, I don't think I have to explain you in detail what each of these types of capital means. It's understood from the word. Financial means relating to your finance. Intellectual means your staff, the knowledge that they are having. Human is your employee, the skills that they possess. Right? Now we are moving on to the content of an integrated reporting. So what is the content? Organizational overview. It covers organizational overview, governance, opportunities and risk, strategy and resource. What is your strategy and what is your resource allocation? Business model, performance, and future outlook. So you see so many things are being given by this non-financial measure, by integrated reporting, which is not covered in your normal financial reporting. That's the reason we are studying all this non-financial model as well. So that's it for analysis and interpretation, and make sure that you go through all of this: adjusted performance measure, integrated reporting, earnings per share, ratios. Okay. So next video and the last video under your revision series is current issue. Current issue, there is no doubt you are going to get current issue. 100%. So you have to be prepared for it. Okay. Till then, thanks for watching and see you in the next video.